Wait, sitting there.
Hello.
Well done, Pat. I hope you've had a good session in court this morning and
Thank you.
managed to lock up all the bad guys and girls.
Yeah, they did. They're very comfortable where they are. They're very happy in their own little bubble.
So look, welcome along, and for everyone that's just joined us that hasn't been on the previous session, welcome to Past District Governor Pat Waite and his session on how to better administer your club with all the ins and outs of those important pieces of club process that we should all be aware of and practice. So club administration, Pat, the show is yours.
Thanks, Mitch. So is the plan that I just walk through the presentation and then we have questions at the end?
Yeah,
Easier,
and there's a group chat questions that
okay.
I'll invite people if they're wanting to ask a question, if they hear something come up through the session, and we can get to those at the end when you've completed your presentation. So if you want to throw up your presentation, share your screen, that'd be great.
Right, let's go. Let's get going first. And then you get myself organised. So let me go back a bit. Can everyone hear me now?
Loud and clear, Pat.
Can you see the screen yet?
No, not
yet.
Okay,
let me get back again then. I'll have to get myself organised. I've failed the test, Mitch.
Oh, that's all right. Hit the share screen and you should have your presentation as one of the windows. You just need to get your mouse over the right one, click it, and then share. You should be okay.
Okay, well, somebody got one second. Hang on a second.
And if you get really stuck, I can save you.
That's right. Let me come back to the screen. Share screen. Now we're getting there. You've disabled the share screen, right?
Oh, hang on, mate. Wait on a second. Okay, try now, Pat.
Okay. Right. Now, does everyone see that?
Not yet, right?
Yet. Let me just go back again. Share screen. Share.
There we go. You're up.
Is my screen now ready? Okay.
Yeah, so just throw your PowerPoint up and you're good. That's a lovely email, though.
Right. Now everyone can see that now?
Yep. Go for your life, Pat. You're on.
Right. Let's move. Every 3 years, the council legislation has a review done of the legislation for Rotary International. And part of that process, the outcome of that comes through rule changes. And for clubs, that comes through reviews of the Constitution, club Constitution. So changes are reflected in the Constitution. And from that, a model club Constitution is developed, which comes out to Rotary districts and Rotary clubs. In 2016, when I was council on legislation, there were some major changes done, and we went around the district promoting the new Constitution, which was much wider and gave ability to clubs to do lots of different things. In 2019, there were further changes, some minor changes made. And so these are the 2 or 3 points that I'd suggest the new improvements on the last Constitution. So 2019 Constitution gives a clearer definition of using technology to hold meetings. It allows, for example, using the internet, a whole range of other technology, more definitive than the 2016 version. Second thing, it provides an ability for clubs to have hold meetings at least twice a month. So that was a change from the 2016 version. And that's reflected in the bylaws, which I'll talk further on. And it also allows clubs to create other types of membership. So it does refine that there are 2 types of members, active members and honorary members. And then it goes on further under Section 8 to say that clubs can create other types of membership. And again, you have that ability when we come to club bylaws. So those are the 3 changes. I'm not necessarily saying everyone should just change your constitution for the sake of those, but if you're looking to review your constitution, think about the 3 changes that came out of that constitution review in 2019. And so if your club wishes to update its constitution, there are some processes that you need to follow. First of all, the club members need to discuss and then resolve to change the constitution. That's pretty basic. And then if they choose to do that, there are some procedures in place that require the club president to sign a certificate saying that the club decided to make the changes. He has to do an extra declaration, or he or she rather do a declaration, and then that's filed with the Registrar of Incorporated Societies. And I have all those documents. If everyone's interested, they are welcome to get copies from me of all those various resolutions and documents and filing certificates. So it's quite simple, really, but the Registrar of Incorporated Societies is really where all these changes are recorded in the form of a new club constitution. So I'll move on from constitution because really there's more things to talk about than constitution, but that's really the core law of how our clubs operate, the franchise arrangement that Rotary International has. The second key document, which is often overlooked, and in our club, we couldn't find our club bylaws. They got lost in history. And so we went back to scratch and redid our club bylaws with the new bylaws, which is a very good idea. And so the second document that your club should have on file is a set of club bylaws. And they are the rules that govern the activities and operations of your club. And there are some key elements in there that I've just listed down here. But first of all, Article 3 gives how you actually run your elections and how long your officers hold term of office, how long they're a president for or a treasurer for. Some clubs are defining their term as being 1 year or 2 years for treasurers and directors. Some have longer terms, but that gives you a chance to think about how long you want to have your office holders in office. This Article 4, the new Article 4, gives a job description for the officers of the club. And that's important when we come and talk further on about the new changes coming up in incorporated societies. But this is a chance for the club, and this is only for the club to use, not Rotary International, but it's your club bylaws. You can actually set down more prescriptive what you want the officers of the club to do. The fifth one gives the ability to hold meetings at least twice a month, and that gives you more definition. So Article 5 is a place where you can fill in how often you want to hold your meetings. Now, if you want to hold them frequently, more than frequently, less frequently, you can have the opportunity to say, for example, you can have projects as a meeting. And Article 9 allows the club to decide how it wants to manage its finances. And it's changed the old club bylaws to say you don't have to have an audit. You can have a review undertaken by a suitably qualified person. And that's a distinctive difference. If you still have old bylaws, club bylaws, that require you to have an audit, you are stuck with an audit. But if you want to change it to having a review, now I'm an auditor by training, or by, unfortunately, so I do a number of audits and reviews for not-for-profits. And so I would strongly recommend that if you had the old club bylaws, you change it to actually require a review, not an audit, because there are very few people now prepared to do audits unless you pay them. And for a fee for a not-for-profit, you might be paying $2,000. So I think that's something to pick up and consider. They can be changed at any regular meeting. So somebody may decide at the moment to actually have a change to the club bylaws and have a review of them. It's quite healthy for a club to have a discussion about their club bylaws. They don't necessarily need to be lodged with the Incorporated Society Registrar, but some clubs decide they do it so they know where they are. And our club's decided to do that now. So we've lodged our bylaws with the Registrar of Incorporated Societies, I believe, because we now know where the latest version is, because we did struggle to find what was the latest version of our club bylaws. And I'd suggest that you also should make it a requirement that the secretary or somebody within your club actually make sure that they are holding the club constitution and club bylaws, the latest copy. Because from time to time, you'll be required to go back and question something that club's doing or be interested in thinking about, and you may need to go back and say, can we do it under our constitution, and are we allowed to do it under club bylaws? So that's a bit of a summary of the club bylaws. The next one I want to touch on, I'm going through quite quickly so we can have a conversation about them, is taxation. Charities Act 2005 changed the whole way that not-for-profit organisations operated. Up until that point, you could register as a tax-exempt organisation, which is what Rotary clubs were. They didn't have to pay tax. But then the Charities Act 2005 came into effect, and that meant that all not-for-profit organisations became taxable entities. And so that means that they actually are obliged to pay tax on income they earn. At that time, the Rotary clubs around New Zealand decided to actually review about what the options were, and I was part of that process and met with the Charities Commission and in the Revenue Department. And as a result of that, we decided, the whole district in New Zealand decided to form a charitable trust. And I was involved in developing a model trust deed, which clubs then took to be developed as their charitable trust. Rotary International gave approval for it, and the Inland Revenue Department and the Charities Commission approved it. So as far as I know, nearly every club in New Zealand has a charitable trust. And so that's how charitable trust became into being. And the idea was that when we earn money for our projects, under the old scheme, it was tax-free. Under the 2005 Act, Charities Act, unless you're registered as a charity, and Rotary clubs were not recognised as charities, they were recognised as social organisations, you're obliged to pay tax on income. And the way around it, we decided was, we would encourage clubs to transfer the surplus at the end of each year to the charitable trust as a way of minimising tax. Not avoiding tax, but minimising tax. And so that was how Rotary Charitable Trust came into being. So I mentioned before, not-for-profit organisations are required to pay tax on income earned, such as fundraising and interest. You don't have to pay tax on income earned from yourself. So money you raise in your sergeant session or for your meals, surplus for meals or subscriptions is not taxable. It's money you raise from investments such as interest or fundraising. And not-for-profit organisations are entitled to deduct $1,000 from their income before the tax applies. And I recommended that you consider donating any surplus income to your club's charitable trust prior to the end of your financial year. That's by the 30th of June. And charitable trusts are tax exempt, provided they operate within the objects of the trust deed that the trust deed is established on. Now, it's pretty important for clubs to actually be conscious of the fact that as taxable entities, Rotary clubs are obliged to pay tax on income. So if you reach the end of the year, 30th of June, and you have surplus income above $1,000, you have to pay tax on it. And that applies for our district as well. So if district earns more money than $1,000, it's obliged to pay tax. And every now and again, maybe once a month, or it used to be more frequent, but about once a month, a club will phone me to say that they've got a problem because they have been found to be owing tax. And I have to actually help them work through the process, and generally it involves in the Revenue Department doing an assessment and paying back taxes. And one club was obliged to pay $25,000 in tax for back taxes. So it's pretty important to be aware of this and to actually be conscious of the fact that clubs are taxable. Now, every now and again, I hear from treasurers that somebody in the club says, no, that's wrong, because we have a lot of people with history who have a good memory about before 2005. But that's an important year. 2005 changed all the way that not-for-profit organisations are treated for tax in New Zealand. I can come back to talk about tax further on, which is one of my favourite subjects. And then the second thing I want to talk about is the charitable trust, because, as I said before, to help eliminate or minimise tax, Rotary Club set up a charitable trust, and it's called the Rotary Club of Tawa Charitable Trust, or Rotary Club of New Plymouth Charitable Trust, whatever the name of your club is. The key points are that for charitable trust, and this is again a problem for lots of clubs, is that every year the trustees of the charitable trust have to file an annual return with the registrar and pay an annual filing fee. And many clubs forget to do that, and so they'll find themselves struck off, and they have to go and rebuild their charitable trust again and refile it and apply to have it reinstated or put a new trust in place. And I don't understand why that happens, but I guess it's because in clubs often we don't hand on information to people who take over as treasurers or trustees. The second most important thing about trusts that I want to emphasise is that clubs must be kept at arm's length from the trust. And I do despair from time to time when I get involved in helping clubs sort out problems, is that some clubs seem to think that they keep all their money in one bank account, but have two entities. In actual fact, what the rule should be, that the trustees have independent meetings from the club. They keep minutes of those meetings, and they keep the finances separate from the club funds. I'm not very good at spelling, I can see in my notes. That's a very important element. Inland Revenue Department are doing audits of not-for-profit organisations, and they've been through rugby clubs, and they're starting on Rotary clubs. So rugby and Rotary is almost like they reach the R's, and they're starting to work their way through. And when they come to look at a charitable trust, and they see the actual fact it's treated as part of the club and not as a separate entity, they're going to say that, well, that's been set up to avoid tax. If you understand what I mean. It's very important that you demonstrate, the trustees can demonstrate minutes, they can demonstrate the finances kept separate. What is ideal to happen is that the board of the club will decide that they like to make a donation to a particular cause. And they should then send an email to the trustees to say, so there's a trail. They have an email that says, dear trustees, we'd like to donate $2,000 to ROMAC or whatever you're going to do. And the trustees will then get that email, they'll have a meeting, and they keep a note of that meeting, and they agree that they put the money and they pay the money over. Important that there's a record of those payments, because Inland Revenue Department will be looking to see, is this a farce or is this a real trust? And remember, the purpose of trusts is to help in the objects, such as looking at poverty, looking at education for people, looking after the community. So, trustees need to be aware that what they pay out is actually legitimate. Which then comes down to my next point about charitable trusts. Because every now and again I get involved in helping clubs unravel what's happened with the trusts and the trustees. And in some cases, the trustees decide that they don't agree with what the club wants to do, and they will refuse to make the payments. Or in one case in Wellington, the trustees have resolved that they're going to create a permanent trust, and they're not going to pay any money out for 5 years, and they're going to build up their funds. And unfortunately, that threatens the viability of that charitable trust and the purpose of the charitable trust. And I suspect when they do the annual returns, if it was discovered, the internal affairs who looks at these issues would be deciding that, no, this isn't a legitimate charitable trust. It's accumulating trust, if you understand the difference. So the point I'm making here is that trustees must be aware of their obligations, and they must know the trustee back to front and be aware of their obligations, that they meet the objects of the trust. That money paid out from the charitable trust is actually in line with what the objects of the trust are. And they're pretty clearly written out. The second point that I want to make is that trustees must rotate. In the trust deed, it talks about the term of trustees. And it says that after every third year, one of the trustees will step down. So there's a rotation of trustees. So you have fresh people coming through trusts. And I do find from time to time when they have problems is that some trustees like to stay there forever. And they become embedded in the trust. And they see it's a very important job, which it is an important job. I encourage clubs to think about appointing trustees who are people who understand what a trustee is. It's a very responsible role. The third point is that trustees must be active Rotarians. So and you'll find in the front part of the trust deed, it says there, trustees will be Rotarians. If a trustee resigns from the Rotary, they must step down as a trustee. And I even went further and say, become an honorary member, which means basically you've retired. You should step down as a trustee as well, but that's not mandatory. I think it's about having people who are actively involved in the club being trustees, because remember that the club, this is actually a club funds. And even though it's in the charitable trust, the trustees must be aware of what the club wants to do, that it's the club's purpose that they're fulfilling, not their own particular hunt. And in some cases, when the problems have arisen, is because the trustees have a particular interest in supporting a particular cause. It's not necessarily a cause that the club supports. So it's a sort of an interesting balance between the two. And the last point is, again, coming back to the charitable trust deed, important to understand what are the objects of the charitable trust. And if you spend money outside that. The question comes up regularly as to, because the trust deed will say the money that's from the charitable trust is to be used in New Zealand for New Zealand purposes. But we send money overseas for overseas aid or Rotary Foundation purposes. So I have notes which go out which say, yes, it is. You can pay money to an organisation that will give you a receipt to say that the money is going to be used for charitable purposes overseas. And Rotary has two organisations that are registered under the Tax Act. The Tax Act has a long list of organisations that are recognised as New Zealand entities that do work overseas, such as Oxfam, such as Greenpeace, such as Rotary Clubs of New Zealand Charitable Trust, World Rotary New Zealand, World Community Service, which is another trust set up. So I'm happy to send out those notes which give some more clarity around it. But if you have a discussion at your club about not being able to send money, and there's still one club in Wellington that still refuses to send money overseas or make donations to Rotary Foundation, because they believe it's against the spirit of what the trust deed is, the legal spirit of the trust deed. You can use those two Rotary organisations to send money overseas, and there's a process in place. And in your club directory, under page 65, 66, and 67, there's notes there which tell you how to do that.
And if I could just jump in there, there's a question here from Mike, which is relating to the charitable trusts and I guess money in the club that could be taxed. So it says, I understand that if a club retains no more than $1,000 at the end of the financial year, i.e. distributes any excess above $1,000 to the charitable trust,
yeah,
no tax is payable by the club. Is that correct?
That's correct. So what they do is you in your tax return, your club should be filing a tax return each year, and they'll put down there as tax. They'll put down there as income $2,000 as an example, and they'll have $1,000 deduction from that. That means that they've got tax to pay on $1,000. If they've got $1,000 income and they deduct $1,000, there's no tax to pay, no income for tax. So that was my point. Don't leave the money in your club account until past the 30th of June. Otherwise, you have a liability for tax.
Just another one that's just come in from Gordon or Catherine, BT. A charitable trust must be registered with donee status. We operated as a trust, but our donations were not recognised. We now have that status, but people have stopped.
Sorry, Mitch.
Just do it again. Gordon, there might be a bit more to add to that.
Okay.
Yeah, where you go.
Yeah, it's basically we didn't have donee status, and as a result, people's donations were refused by IRD, and as a result of that, people stopped donating to the foundation and stuff. So it did create problems.
So the club didn't have donee status, or the charitable trust?
Our charitable trust did not have donee status.
Because charitable trust actually is a charitable entity, and it has a charitable number. And providing you put on the receipts that charitable trust number, you can give receipts, and they are deductible.
No, the IRD refused them, Pat.
But did it have the number on it when you go to the receipts, Fout?
Yep.
They're not correct.
So I went through the rigmarole again, and they said, "Oh, you've now got status."
That's right. So automatically, when you register a charitable trust, you become a recognised donee, whatever it is. So you actually can give receipts out for a charitable trust. Something happened in that process of registration, automatically you should have got that. So it's a mistake on their behalf, I suspect. But the clubs themselves, unless you register as a donee organisation through IRD, can't give receipts out. It's a charitable trust that gives receipts out.
Yeah.
Sounds like it was a decision at about 5 o'clock on a Friday by a tax person.
It did create a lot of problems, I'm telling you.
I can tell you, I imagine too. They're not always right. Surprising, isn't it?
Yeah.
Mitch, can I jump in here?
Yes.
Pat, just to complement your commentary around donations to the foundation, we do have a process that goes through our foundation chair, which is incoming Martin and Peter Whittington. What I would like to clarify for all of those who are listening is that while it's correct we have two trusts, the RNZWCS and the NZRCCT, which are legally allowed to ship funds offshore, I'm doing quite a lot of work in the background around this situation at the moment, and talking with Parramatta and RI is the preferred route for all our contributions for polio and for foundation contributions, either from an individual or from a club or the district, are to go through the NZRCCT. And that process of remitting those funds at the moment goes through each district foundation chair. Right. So if you want to send funds, you want to send your regular foundation contributions off to the foundation, please talk to Martin and Peter Whittington. They have a form which is on the website.
And in fact, just on that point, Pat, one of the other queries here was around making available all the documents you've been talking about, and Richard should be able to upload those into our website to make, and Club Runner be able to make it easily accessible for the current up-to-date documents that we need to be looking at and using.
Good idea. I'll send you those, Richard, after this presentation.
Thank you, Pat.
Shall I move on to the Incorporated Societies Act?
Sounds like the next interesting step, Pat. Go for it.
Isn't it? So we have an Incorporated Societies Act 1908, and that is the act in which Rotary clubs are registered. Now, for those who, perhaps I should tell, it's like sucking eggs, isn't it? But I'll tell you anyway. The reason why we register under the Incorporated Society Act is that makes a new entity. If we operate a club without being incorporated under the Incorporated Societies Act, we are individually liable for any debts that we incur, any liabilities that we incur. To get around that, organisations that are like us, not-for-profit organisations that aren't just clubs, but they are a society, register and as an incorporated society. and that gives them a new entity. So the Incorporated Society, Rotary Club of Tawa Incorporated, is an entity on its own. It's a person. And so if anyone took a claim against the members of Rotary Club of Tawa, they're actually taking a claim against the Rotary Club of Tawa Incorporated, not individually. That's the advantage of being registered and incorporated under the Incorporated Society Act 1908. For the last few years, there's been a great lot of work been done on updating that new act, the old Act 1908 Act. Most of the legislation has now been replaced by new legislation. And there's a new bill under discussion, which has now been out for consultation and was approved by Cabinet in May 2019. And that is intended to take over the 1900 Act with a new Act. Does that make sense? There are 23,000 entities on the Incorporated Societies Register, and there's around 250 Rotary clubs. And so, providing they do the annual returns and file their accounts, they are continued to be registered as an incorporated society. The new Act, when it does come in, now of course COVID-19's changed all this, but this was expected to be in place by before the election. I'll give you a rundown of what that's going to include. This is what the key changes in the Act are. Currently, when you register an incorporated society, at the time of registration, you must have at least 15 members. And if you fall below 15 members, you can continue to be registered as an incorporated society. The new Act says that societies must have 10 members at all times, not just when you incorporate. So that is a question for clubs who have less than 10 members or may fall below 10 members. And there's going to be a space and time where clubs will be given the opportunity, or incorporated societies will get the opportunity to bring their membership up to 10. If they don't, they get struck off. That's quite an important point for clubs who are small or dwindling. The second thing, it's got quite stringent duties for committee members and officers, and very similar to commercial businesses such as company directors and trustees. For example, they must disclose any conflict of interest. They must act professionally as a person of that skill should be acting. So it's raising the standard for club presidents and club officers up a little level. Not too high, but a little bit more than what it is at the moment. The third thing, it requires annual reporting, and it must give information about membership numbers, hence the reason about be starting to look at clubs that are below 10. It must give financial reports within 6 months of the year end, which is pretty much what we do now. And it must contain information for a new role, which is called the contact officer. So the registrar is looking for somebody in every organisation, incorporated society, to be the key point of contact. And that doesn't have to be the president, it could be the secretary or treasurer or somebody else designated. But that's only a small detail, but that's a new requirement they're going to have. The fourth one, which is new, and that is that there must be a dispute resolution procedure in place, and it must be described in the constitution. So the clubs will be, who becomes an incorporated society under this new act, must display in their constitution a dispute resolution. Now currently, the Rotary Constitution doesn't have that in. And I've talked to Rotary International and we'll draft that to put that in. It's most likely the same as most incorporated societies have that in their constitution. And it basically says, this is the process. If anyone has a dispute with a club ruling, this is the process that they need to do. They need to go in writing to the president, and the board has to have a review, and there must be a committee to examine that dispute, and there must be a way of resolving it. I've just helped another not-for-profit organisation do a new constitution, and they've got a page and a half on this particular aspect. And when I was in last year at San Diego with the training, during our year when we were over there, I asked the district governors-elect what was the biggest concern, what was the learning that they had heard from the previous governor, including our district, and that was member disputes. It's taking up so much time for district governors. And in my last year, I've helped a couple of disputes and clubs try to help the district governor resolve a couple of issues that people have raised. So we'll need to think about that. The fourth one is going to make it amalgamations and mergers of societies easier, so that you may choose to join 2 Rotary clubs together, and the process is going to be made much easier and encouraged by the registrar. The sixth one is about audits. For an organisation, society that has annual expenditure of 2 million and assets of 4 million, which there aren't many, I guess, Rotary clubs that have that, there's a full audit required. And the registrar has the power under the new Act to remove societies that fail to maintain the membership of 10 members or fail to lodge annual financial statements or file an annual return. And again, they can do that now about not filing annual reports, or statements rather, or annual returns, but they certainly don't have that requirement on membership. The eighth point is that under the new Act, when it comes in, that societies must use external reporting standards in their annual financial statements if their annual payments are $10 million or more, or assets of $30,000 or more, and they have donee status. So that external reporting board standards is what charitable trusts are required to do their annual reports and financial reports in. And what it does is not huge, but it basically requires the society to actually describe in words what their purpose is, how they meet the objects of their constitution, and how they manage their funding, and how they pay money out, where the money goes to. So it's asking for an explanation from the board of that society on how they're operating, and are they meeting the objects of their constitution. The ninth point, there's no change obligations, still no tax exemption for the new societies. And there's also a new requirement that members can hold the society to account, and they can take them to court. So you can be a member and you feel disestablished by the organisation and disenfranchised, and you have a major dispute over some particular issue, you can actually take them to court under the new legislation. Gives you a lot of powers, members a lot of power. And that puts a requirement on that society then to be above board and to not allow members to feel disenfranchised. And sure, any disputes are settled. Hence, going back to why you'd have that dispute resolution process in place. Now, there's going to be a period of 2.5 years where people who register under the New Societies Act have a chance to amend their constitution to actually meet these requirements. In other words, put in a mandatory dispute resolution service and a whole lot of other areas. They can re-register and decide to start from scratch and form a new society and register, or they can choose to not register at all and continue on as a club. In which case, remember the difference between being registered as an incorporated society and not is that if you're not and you're a club, not registered, individually the members are liable. So you have if somebody takes a claim against your organisation, you have an accident at a project, people get hurt, and you don't have the project insured, or you've been at fault, individually the members of the clubs will be sued. If it's an incorporated society, the organisation itself is sued. If that makes sense. So that's my slide. I'm happy to go back and look at anything else. Go back in any of the slides if you'd like to go back in the slides, or answer questions, Mitch.
Yep, there's one in here, Pat, and it's just a clarification one from Mike, which was around, again, just the $1,000. Do clubs with no more than $1,000 in surplus for the year and charitable trusts have to file tax returns at the end of the financial year?
Yes, they do. They do. They're obliged to file tax returns. They're a taxable entity. And even though they've got nothing to declare, they should file a tax return.
Just to say there's nothing to declare, and then
right.
Everyone's happy.
Well, they'll show income and they'll show donations. So your income might be $30,000 from projects, fundraising, if that's the club's being used for fundraising. And of that, $29,000 has been donated to the Rotary Club Charitable Trust, as an example. And
right.
that's recognised as a legitimate deduction, and they've got $1,000 left over, less the $1,000 exemption, and they've got no tax to pay.
Okay, and there's a question, or more of a statement from June here that's really about that topic where clubs that have under 15 members are going to be impacted upon, and I guess maybe a comment from either yourself, Pat, or DGE Gillian, around what the future for smaller clubs would be if you're below 15 and you've got to comply with these requirements.
I think there's going to be an issue for the district to consider on what they're going to help. But if clubs are below that 10, if they've got no below 10, there should be a bit of a planned started discussion. We've got plenty of time to do it. There's 2.5 years to get this in place. So we needn't get too panicky, but there should be a discussion with the club to say, are you able to actually grow your membership? Is there an opportunity to move to another club? Because lots of small clubs are in smaller areas, or have you thought about winding up? And I had a talk with Rotary International yesterday, conference call, and it could be that that's what's going to happen, that we may have fewer clubs, but they'll be stronger clubs. On the other hand, this might be an incentive to get your membership up.
Exactly. Gillian, thoughts on that?
Thank you. I'm just thinking about one of the clubs in Wellington that is a very small club, but just recently they had a meeting which was facilitated by one of our assistant governors, and it went extremely positively, and as a result of the conversation they had, they are now growing the club, I think by, I'm not sure, 2, 3, 4 members. So I think that small clubs do have options, and maybe it is just a matter of having a facilitated conversations, finding out what the issues are within the club that have caused the reduction in numbers potentially, and seeing whether there are ways through that. But as Pat mentioned, there are definitely other options too. Merging of clubs, for example, that's another thing that's happened in one of the wider Wellington clusters as well. So if clubs are struggling, if numbers are low, let's have a conversation about it.
Yeah, I think because it's small doesn't mean to say it's not doing a good job.
Absolutely.
So it's a legal change rather than sort of Rotary change.
Yeah.
And I've seen some small clubs bound up to become the most exciting clubs. Often it just needs a change of leadership or a new focus.
That's right.
Get up.
Yeah.
There's another example of Stratford, my hometown of Stratford Rotary, where they formed the satellite club. And their numbers are dwindling quite rapidly, and they'll fail this test. But they have grown a new club of young people in town who are going to take over.
That's right.
I think that's a smart strategy.
Yeah, absolutely, I agree.
June, did you have a question or just a happy thumbs up? A happy clap. Well done. Looks like you're going.
Thank you for that. Pat.
Hi, Jane.
And Gillian, thanks for that answer. Hi. Yeah, I was wanting to know how we were thinking going forward in terms of clubs that are struggling, or if there are new clubs that are wanting to form and may not have 15 members or more.
Yeah.
Just start the conversation from now. I'm starting to think about how we would deal with that. But thank you for that.
So I think if small clubs could, if a number of people want to start an organisation, under the new Act, of course, they can if they've got 10 or more. Currently, you have to have 15, so that gives some pressure off that. But they can start as an informal satellite club as part of the Rotary Club until they become a student.
And just to clarify that, Pat, a satellite club requires fewer members than a full club.
Correct.
So it is easier in terms of numbers to start that satellite club.
And that helps the small clubs too, because that becomes part of their numbers.
Yeah,
So,
that's the point. Stratford actually aren't a small club anymore. They've got 10 new members. So they would actually qualify um, they'd have above 10 members in this new situation.
Yes, they would. Exactly right. And that's that's very smart thinking, isn't it?
Yep, very.
Yeah, years ago they set that up. That's a good way of doing it, I think.
Was that your supplementary point, the member for Namutu? Thanks, Murray. Beautiful. It's like being the speaker, Pat, isn't it? You know?
Yes, you do a good job.
Order. All right. Any other comments or questions for Pat, who's made club administration, dare I say it, Pat, sexy?
Thank you.
Kept everyone's interest for the last hour.
It's something I enjoy, but I can give all their documents to Richard, and I'll give him a copy of the new constitution, the 2019 constitution, the 2019 club bylaws, model bylaws. I'll also give him my list of questions and answers, frequent asked questions and answers that I've developed. Every time somebody asks me a question, I'll add it to the list. And that gives you an answer. And it gives you the Schedule 32 from the Inland Revenue Act of organisations that are approved to send money overseas. And as Richard said, there are two that Richard gets heavily involved in.
Excellent. And look, we're really lucky to have someone who's got this topic absolutely down pat.
Absolutely.
And I would also suggest to answer Phil's little question, Phil's really keen to share your presentation, Pat, with his board and directors in the club for the coming year. And as we said at the beginning, and we'll continue to do for all the presentations, there will be a link published out by email to the presidents and AGs, as well as I would imagine on Facebook and in the newsletter, for everyone to get to the documents and presentations that we've heard over the weekend, plus the Zoom video conference, so you could actually sit in and enjoy Pat and the other speakers' dulcet tones with the explanation of the PowerPoint once again with your club members, which would be an awesome opportunity for a coming up cold winter's night.
Exciting, riveting.
Pat, if I can just say, that was just an absolutely outstanding presentation. Unfortunately, it has shown some woeful shortcomings in my own knowledge. So I'm really keen to have a look at that PowerPoint presentation again.
Oh, you're welcome. That's good. I'm pleased it's useful.
And now that you've seen it, Phil, and your knowledge has been filled up, Pat's looking for an assistant at any time.
So we're fortunate in the Revenue Department have allocated a manager for Rotary, and she's a returned exchange student from some years ago, and I think also an ambassador or scholar. And she works for Inland Revenue in Auckland. And if we have an issue that involves a Rotary Club, I call her and she'll allocate somebody from around the country to meet us.
Brilliant.
And she's a fantastic young lady. And when we've had to work with Inland Revenue on some tax issues, Inland Revenue have been fantastic, and they'll generally work through the issues and say, well, let's look at the last 3 years. What can we do to help? And I've met with the commissioner of Inland Revenue, and he at that time was a male. He said, you know, the last thing I want to do is upset Rotary for the good things you do, but there are laws, and we'll work around how best we can help you sort them out. So I always find they're very willing to help.
Brilliant, thanks, Pat. David Young, you had your hand up. You've got a question or comment? Yep, you're good to go. You're off mute.
Yeah, I did. I'm sort of haven't studied our accounts to understand. But do I understand that in the case of our accounts for the club, we need to keep a clear distinction between taxable income and non-taxable income? So things like donations are non-taxable, and profits you might make on your lunch are taxable.
Yep, you should keep. Well, your treasurer should keep a good record of what comes in. You know, and I audit a few Rotary clubs, but I find the Rotary clubs are pretty clear. It's obvious. I think if you just look at money you've raised in projects as taxable income, interest on your income is taxable. Interest on your investments or deposits are taxable. Money that you spend within the club itself by members is not taxable. So you deduct that from the point of view to work out what your taxable income is. So if you have money left over meal, like our club charges a small margin for its meals, and that goes towards the club funds. That's not taxable. That's just trading with ourselves. If that makes sense.
Brilliant. Anyone else with a query, question, comment before we wrap up? Looks like
Yes, can I
go
ask a question, please?
Go, Linda.
Yeah, Linda from Fielding. I have this year discovered that our club still runs under the 2008 Constitution, and the end of the financial year is the 30th of April.
Right.
2 questions. Would it be better to wait till this new 2020 bylaws come into place and do the change then? And secondly, is there a problem changing the end of the financial year from April to June?
No, it's not. That's quite easy to do. That would be a simple thing to do. In earlier days, Inland Revenue went through and allocated our annual end of year dates to different organisations. And that's why we've ended up with August and April at different times. It's useful to have the end of the financial year to Rotary's financial year, which is the end of June. So that's an easy thing. Just put an application in the revenue for a change in balance date, end of year date. That's easy to do. You go online, you can find the form for that. The Constitution 2008, I can't remember what 2008 looked like actually, but there's been a lot of changes since then. It could be worthwhile waiting until the new one comes in, or you can get one done now. The 2009 gives you flexibility. 2019 gives you flexibility for meetings, which may be something you want to do, because if you've got challenged, if you're holding meetings less than once a week, if you're having meetings less than once a week, rather, and you got challenged, you're outside the rules of the Constitution, if that makes sense. So,
who would likely to be that challenge us though?
Well, every now and again you find unusual people that belong to Rotary.
Present company excluded.
Another interesting one I found that I helped unravel was a club holds a market day every year, and at a period of time they were actually charging a lease for a car park space, so to have a stall, and they were charging it out. And the member of the public wrote to Inland Revenue Department and said that this was a commercial organisation and they should be paying tax on the income. And I got involved in helping unravel, and sadly, you'll find people are a little nasty, and it did stir up quite a bit of a mess. Wasn't a member of Rotary, it was somebody from the public decided to have a go at Rotary. And so what they do now is they ask for a donation. So if you want to put your tent up in a particular space for the market day, they ask for a donation of whatever the figure is. And the money comes as a donation from Rotary Club. So they changed the terminology. It was just from saying, here's a lease for the space, it's now a donation. So it's a bit thinking smarter about how you actually raise your funds.
Thank you, Pat.
Brilliant. Yes, Richard, Stephen. Hang on, I'll even unmute you. Having trouble unmuting you, Richard. Hang on.
I'm done. All right.
You're good. Cheers, mate.
I'd just like to add my sixpence worth, if you like, to what Pat is saying around the separation and distinction of club operations versus trust operations, and being careful to be very sure that you know where money's going, to which and for what purpose. And in my club, for a number of years, I have tried to reinforce with our board and our members that anything that we are organising for a donation, where we are seeking a donation, goes directly to our charitable trust. It does not go through our club accounts. That saves quite a bit of accounting stuff that you need to worry about at end of year returns, but more to the point, it provides a direct audit trail of where the money's gone, and it's less disputable about that. It is more clear that the money's being raised for a charitable purpose, because when the funds are dispersed, they come from a charitable trust. Now, I do know clubs that are running big projects through their club operations, and I'm sure that's giving their accountant and their treasurer quite a bit of work to make sure that all the boxes are ticked. So the bottom line is that I've said to simplify our lives and to make it very, very clear and clean, anything that we do with a project that is raising funds, where we collect funds, it goes directly to the trust and it's tagged for that, with that project name. So when the trust does a financial report, we've got the trust, not only the trust, but the club has a record of exactly what was achieved.
So can I just add a bit of caution though to Richard, if I'm not disputing what you're saying, but if clubs ask me what they should do, I always say, if you're running a project that has some risks around it, I would put it through the club, because the club is an incorporated society, and therefore members of the club aren't actually, you can't take action against the members of the club. You can take action against trustees if the trust is being seen to be derelict. So I would, if I was a trustee, I'd be a bit cautious about taking on that liability unless there was clear insurance put in place. Now, Rotary insurance now does cover activities of the club as long as they're aware that it's done by the charitable trust. So if you have a project, say like a market day, and there is potential of something getting run over or damaged or some claim that may come back to haunt the club, I would suggest that it's been run under the name of the Rotary Club. If it's run, if you're going to run a project with under the charitable trust, another requirement in that revenue you look for is the project being advertised as being run by the Rotary Club Charitable Trust. So you know, you need to think about who's actually running the project. Is it the Rotary Club of Tawa, or is the Rotary Club of Charitable Trust? There is a question being asked, and this came about a member of the public who went along to a particular market day and bought something, and then said, for whatever reason, asked the question where the money went to, and they were not aware it went to the charitable trust because they thought they were dealing with the Rotary Club. Now, that's the most bizarre question, situation to arise, but it can arise. So I always say to people, just be cautious when you're organising a project. Think about the liability. If it's a simple fundraising, doesn't have liability around it, nothing could happen. Sure, put it through the Rotary Club Charitable Trust. It's easier, as Richard said, much easier for bookkeeping. But if you're running it as a project and you're going to raise money for your charitable trust purposes, you know, you should think about liability, and also anyone questioning later on who's actually running this project.
Pat, can I raise a question on that?
Certainly.
So therefore, if the club is running the project, it's okay if it breaks even, there's no tax liability, but if there is a profit being made out of it, then the club can be taxed on that income, can't it?
It can be, and that's why before the end of June, if you make a surplus, transfer it as a donation to your charitable trust.
Okay.
You'll be liable for tax.
Yeah, that was going to be my next question. As long as
exactly
we
right.
transfer that out by the year end, yeah.
Yes, exactly right. So by towards the end of June, that's your end of the financial year, work out how much surplus you're going to have and make a donation to your charitable trust.
Yeah, and as long as the club is retaining no more than $1,000, you're okay.
You're okay. No tax liability.
Yeah.
And so your tax return would show total money raised on projects, less donation to the Rotary Club Charitable Trust.
Sure.
And then
the other point I wanted to make was that if any members were to make any donations within the club, they should do it directly to the charitable trust.
Yes.
and therefore get the benefit of the tax rebate on your annual returns.
Correct. Yeah. Correct.
That's a very good point, because we used to collect our club foundation contributions through the club account, which of course was immediately subject to GST because we're GST registered. So that's a really, really good point, Mike. You know, if it's a direct individual contribution for a charitable purpose, yeah, it should go directly to the trust.
Correct. Yeah.
So we do that in our club, and the club issues a receipt from the charitable trust. The trustees issue the receipt.
Yeah, we do that in our club for things like even what we call the Happy Dollars, which is the silent session as well. use that as a charitable trust donation.
We do the
rather
same.
than to the club.
Yeah, we do the same. Go straight to our charitable trust.
And we do.
Just avoids confusion.
Yep.
Mm-hmm.
Well, that's great, Pat. I think I've identified a couple of clubs that have got reasonably sizable charitable trusts that we might be able to interest in giving. Thanks for those questions, Mike, and for everyone that's joined in today. And I'd ask DGE Gillian just to have the final word and wrap up Pat's session and, in fact, today's sessions.
Thank you, Mitch. Pat, thank you so much. We're very lucky to have access to your wisdom and your knowledge.
Yeah.
And I know that you are very keen that clubs understand these issues. It's obviously very important that they do. So having you present today and the fact that your session is being recorded, I'm hoping that we can encourage all other clubs who are not represented here today to listen and make sure that they're on track in terms of the correct procedure and setting up, etc. So thank you, Pat, really great.
You're very welcome.
And I'd just like to add my thanks, as Mitch has, to everyone who's come today. So we've had some pretty good numbers, and I'm delighted that some people have stayed on all day. Seen some familiar faces popping up at each session.
Yeah.
This has been a great day, and I'm looking forward to next Saturday. I suspect there'll be a number of familiar faces in front of me today that will be here again next Saturday. And at this stage, I think the following Saturday there's just one session. But yeah, really cool that we've been able to do this online learning. So thank you very much indeed again, Mitch and Richard, for your very hard work in setting it all up. And thank you everyone for participating. So well done, everyone.
Yeah, good.
Thanks, Julie.